we're going to continue our discussion on cattle and also get some updates into the hog market with our next guest. Dr. Lee Schulz is a livestock economist with Iowa State University, and he joins us now. So Lee, last week on the show, I was asking our market analyst how the new MFP payments would impact corn and soybean producers. Do you see that there's been a reaction from the cattle and pork markets with the MFP news?
Well, I think we're dealing with much different situation when you look at it specifically for pork. There has been no announcement for cattle, but the pork announcement was that it will be paid based on hog and pig inventory at a later specified date. But the difference when we look at crops versus the hog market is, I think the announcement of this MFP payments has implications for delayed plantings and prevented plant potentially switching of crops, whereas the hog market, we're really running at full steam ahead because markets are rather strong right now, and so not going to see impacts on inventory with relation to this payment, as well as the payment is limited to $125,000 last time, and expectations are it would be similar for each entity this time of that $125,000.
And sticking with pork, trade disputes have already cost the industry about $2.5 billion over the past year, and now we have the news regarding tariffs to Mexico. There's still no USMCA that's signed. What are some of the ramifications for pork producers if this keeps up?
Well, I think it's really looking at the opportunity potentially lost on the trade front. When we look at that weekly trade data, exports of pork, when we both include the outstanding shipments, so sales that have been made but not delivered, as well as the actual exports delivered, we're up 22% increase year over year. And so we're seeing movement of that pork. Now, obviously, that's very heavily weighted by China, where we're seeing increases of those commitments as well as the export sales up over 1,000% year over year. But when you start to dig into the data a little bit further, you see that Mexico is down 21% compared to a year ago. Canada only up 2% compared to a year ago. So in aggregate, you're seeing some of those customary markets actually down significantly compared to what we had seen at this point last year. Also noting that Japan we've seen some weakness there over the first 6 months or so here as we look at the current pork market. But overall, they have been limited by the trade issues that we've had.
And Lee, of course, African swine fever is still a hot topic. Any new resources for us on that front?
Well, what I continue to refer producers to is the Secure Pork Supply Plan, and that has really three aims. It's biosecurity, traceability, and surveillance. And where producers really come into play there is biosecurity. And that plan recommends having a biosecurity manager, having a site-specific biosecurity plan, having a perimeter buffer area, and a line of separation. And the point of the Secure Pork Supply Plan is if we were to have an outbreak of African swine fever or any other tier 1 disease like classical swine fever or foot and mouth disease, that this would support continuity of business in the impact of those disease outbreaks. And also important when we look at biosecurity in the Secure Pork Supply Plan, that biosecurity also helps with endemic diseases. So it's something producers should and could be doing anyway to help keep their own inventories secure from disease.
So where do you see pork prices going as a result of this terrible situation in Asia?
Well, we've certainly seen tremendous volatility in prices over the last 8 weeks or so, where we've seen prices in April run up with summer contracts over $1 per hundredweight for hogs. We have seen that back off now here by about $10 per hundredweight or so, or even more on some of those contracts. And I think the issue there is, we haven't maybe seen as big of an impact as we thought from China, potentially, where we did see anywhere from 25 to 30% of the Chinese hog inventory is gone. Now, some of that died due to ASF, but some of that was moved to slaughter as a preventative measure. And also we need to remember that what really drives the demand for a good is, one, kind of tastes and preferences, and there is some fears in China that consumers have kind of stepped away from pork because of the concern of ASF, even though it has no impact on human health. Also, the prices of pork have increased, prices of substitutes have increased, and consumer incomes in China haven't changed, right? But overall, longer term, there's going to be a huge deficit in animal-based protein in China, Southeast Asia, and the United States will surely benefit from that in stronger exports here this year and likely into 2020 and potentially further.
So all that being said, and this can go for cattle or pork, any market trends or advice that you want to make sure we know about?
I'm going to kind of step to something a little bit completely different, but also very relevant to both the hog and cattle markets. When we look at the current feed supply situation, knowing that we brought several stocks or large stocks into production this year, but given the delayed plantings, the issues of prevented plant, we have seen markets really significantly rally here the last several weeks, and that has an impact on costs of production when we look at feed prices. Now, short term, we haven't seen a huge impact as local conditions have kept those basis levels pretty wide and cash prices are relatively low. But I think it's something producers need to keep an eye on because that's definitely impacting their cost of production. And the worse the situation continues to be, could have an impact longer term on not only costs this fall, but as we get into 2020.
Okay, Dr. Lee Schulz from Iowa State University. As always, appreciate you being here, and we appreciate your insight.
Thank you.